Morning, 10:59 UK time, and let's take a quick look at gold. Yeah, doing well. Um, got up to this upper channel and kind of poked through it. Right, 1880 was the high, and why we've got a bit of fear, so people got rotated into gold, and also because of the Great Wall of Dollars coming at you. What's the balance sheet of the Fed? 8 trillion. 8 trillion. So how do you think this balance sheet is going to be at the end of the decade or in 2 decades' time? 15 trillion, 25 trillion. Uh, I'd garner by 2050. We could be at 50 trillion, right? It's going to continue to expand, and there'll be economic shocks along the way, which are excuse necessary for the Fed to continue to expand. That's what it always has done since its inception in 1913, right? Since its charter, it's got a product. Well, firstly, it's if you don't know, the Fed is supposedly a independent organization outside of the Treasury. So you don't want the Treasury embedded into the government. That was kind of the idea, justification behind it, right? But there's a bunch of shareholders. There's, I think, 99 shareholders in the bank, and it's got one product, right? It's the dollar. It's the federal dollar, federal bank's dollar, right? And so it wants to keep issuing those because it makes money on those because it's tied to a interest rate. Obviously, that interest rate is what, around 0.25. Let's have a quick look. Let's have a look at the Fed funds rate, effective rate. So obviously, more dollars in circulation, the less they can charge, right? If the money is tight, then it carries a larger interest rate because there's more demand for it, more demand than supply. So, but now you've got more supply than demand ish. And so it circulates these dollars through its network, right? Its primary dealers, its primary drug dealers of liquidity, right? So let's have a look. Fed funds rate. Oh, here we go. Comes right up. 0.07. Will it go up? Will it go up? It's hard, isn't it? Hard to get off this floor. Obviously, 2008. I think in a healthy economy, you want your interest rate to be somewhere around 3 to 6%. So 2019, look, it couldn't even handle a 2% effective federal funds rate. Should we throw on momentum structure? Flatline. Even pointing down. Yes, it's going down. Maybe into negative territory. All that against the backdrop. So gold, Bitcoin, anti-dollar kind of baskets of wealth storage should continue to do well. Because now you got Bitcoin having its own internal interest rate. It's a bearer assets in limited supply, right? Same kind of like gold. That's kind of general thesis why Bitcoin gets compared to gold. So inflation. So they want it to run above 2 now, right? 2 was kind of the goal, the smoke screen to hide behind to continue to print, but now they're willing to let it go beyond that. And so any noise about deflation there's always noise about deflation, right? There's never when is the deflation? I don't know. It's you have little events, major events, obviously. 08, debt crisis around 2011, right? And Dubai, Europe. But in the 70s. Okay, let's have a look at the 70s. A decade of high inflation and stagflation. Let's have a look. What, it went from like 3.5 to 12. Wow, in 3-4 years, right? And I'm going to take a look at the Dow and how the Dow did during this period. The Dow, I think, during the first half went up, then it went into like a bear market. Let's have a look. But let me just actually look at the DGI. DGI. Say early 70s. That's what I want. Early 70s. So against the backdrop of rising rates, did the Dow Jones actually go up? It should, because they are. Ooh, here we go. Yeah, it did. It went from 639 to 1,000. That's a good return, isn't it? 60% odd. Then we had a bear market. This is when I believe when the inflation shock was hitting. This is when the OPEC wars and the gas crunches. So obviously, if your economy is screeching to a halt on an oil-based, petroleum-based economy, had a huge bear market, right? Went back down below this low, yeah. But this is actually a beautiful chart. Got head and shoulders on the top, bear flags, head and shoulders on the bottom. It didn't actually kind of play out, but patterns are there. Patterns are there. So it's always kind of good to look at historical charts. Anyway, let's go back to gold. Let's go back to gold. And maybe take a look at the miners. GC. What can GC tell us? Do you think it's going to take out the high? It's been a long consolidation. So this, I wouldn't call it a pure bull flag just because of the time it's taken. But if you kind of zoom out, now you're kind of seeing the flagpole, right? Now you're kind of seeing the flagpole, which is a kind of a long one. Ooh, $900. $900 at the breakout point. 2,800. 2,800 potential, always potential. Doesn't have to reach these targets, obviously. Boom, boom, boom. But against a backdrop of continual expansion, and then the wall of dollars finally getting to hit Main Street, right? That's the key. Finally getting it to hit Main Street, and the hourly wage really going up because of the unemployment payments and being paid to stay at home. There's a huge employment crunch in America. It's not really happening in the UK. I don't really see the wage inflation at all, but in America, it seems to be that is the case. What else can I say? So just because you have high inflation, it doesn't mean I've shown you that Dow will crash initially, unless it brings the economy, slows down the economy, right? So what is gold's job? Is it a inflation barometer? It's kind of in the kind of wealth storage vehicle, right? Its price is basically based on how many dollars there are. Shall we throw in some moving averages? Yeah, I'm kind of curious now. Just out of curiosity, let's throw in a 200. 200 and maybe like a 50. Oh, here we go. Inputs 200. Okay. Oh, this is interesting, isn't it? And even though I'm not a fan of moving averages, it's like, you go to a drag strip and there's a bunch of rubber marks or a racetrack, and there's a bunch of rubber on the track, and you're trying to predict where the car is going to go, looking at down the track at the what's the cars lay down on the rubber, right? The tires. So it kind of gives you indication, but it's not really going to tell if the driver loses control of the vehicle and goes into a barrier. Oh, that's a horrible visualization, but yeah, it's kind of true, right? So look at these like tire tracks. Could it have predicted this dump? Well, there's a bear cross, right? But it's kind of after the fact. It's almost when it crosses, it's almost done going down. So you kind of want to be in before, right? So that's why only price pays. But everyone kind of looks at it, moving averages, so they are somewhat important, somewhat of a something to keep an eye on, just because everyone else looks at them. But as a trader, better off going for a double bottom, breakout, flag. There's patterns you could have played. Okay, and that probably played out. What was it? 1669 to 1750. What's that? $80 roughly. 80 on that is 1840. 1840. Boom. Yeah, played out. It took time. April 15th. A month. It took a month to get there. It took a month. But if you got in at the right spot, you were never in the red, right? You could have trimmed profits, could have added to your position, and maybe took out at the 200. There you go. What will it do now? That's the question. That is the question. So compare the GDX. Gold futures. Let's do the GLD divided by the GDX. How about that? Are they eventually coming to a spot where they're going to outperform? Or are they outperforming now? I have no idea. Let's look together. Yes. All. See who comes up. Okay. Let's zoom out all the way. Excuse me, just taking a sip of coffee. 2007. Gold price in the gold miners. So 1 ounce of gold, how many units of the GDX ETF does it buy, right? That's kind of what this ratio is. So 1 ounce of gold bought 8.58 units of the GDX. Is that correct? So gold, what? This is when gold makes high in August. So as we head down, here we go. This is how stocks will outperform, right? The miners. Do text. As the ratio goes down, equals miners outperforming the underlying commodity, right? And that's what you want. You want the alpha. Okay, so double top. Let's have a look. Boom. This is the breakout. So you got opportunity, and look, the measure move takes it to, where does it take it to? I think it's going down to test. This could be a mega bull market in the miners. Yeah, it's off the freaking chart, right? So you got enough. Even if we just go to 200, yeah, wow. Is this correct? 8.54, yeah. Taking out this bottom of 4. It's got enough on this pattern. It's got enough oomph to break this. And this gold bull market in miners kind of got curtailed because of what was going on in the broader economy. The broader economy now is super supportive of $3,000 gold, 4,000. Things get really hot, most people have never really experienced the hype, the mania of a gold bull market. Not in most people's modern lives, right? We've seen it in crypto, but have stock market participants seen a gold super cycle? I don't know. Yeah, I think this is great. This is actually fantastic. Let's actually look against the GDXJ. Again, similar pattern. And this blow off, this huge wick, really kind of give you the indication of where it wants to go down now. Got a flag just about to break. Same double top action. Something like that. Oops, see. There we go. And you don't have to have it white bang on. At some point this summer, it's going to break. We'll take another look as it kind of approaches it, right? I haven't got any gold stocks or bullion, but it could be something I may be kind of, diversify into, right? And now let's look at. Well, hold on. How's it doing for silver? SLV versus the GDXJ. Let's do the majors first. And the majors are kind of. The juniors have actually evolved into a mid-tier kind of gold companies now. There's very few actually junior companies in there, so I think they will see an explosion as money flows into gold. As gold breaks the 2,000 old high, I think we'll see more junior activity, new companies being formed, old companies being taken over, etc. So this is interesting because obviously silver is more of a high fly against gold. The old high. This was a silver bottom, right? This was a silver bottom. Got a head and shoulders. 0.4 break. Kind of almost played out. Other than that, you kind of want to see it perform now, right? It's going to track more closely to the miners, the performance of silver. It's hard to tell because it's got multiple industrial uses as well, so probably not a good indicator. Let's have a look quickly at the miners. If I can find them. Here we go. SVM. And let's just throw on slow stokes. Kind of gives you confidence, doesn't it? Stochastic of a breakout. Yeah, old target. $16. First Majestic. Should be a winner. Stochastic. Ready to rock. Broken out. Didn't even want to test the trend line. Where is it going? 27, 40, 90. You can do it. It's got a measured move to do it, right? Boom. Fortuna, I believe. Ooh, it's getting exciting. Up here, then break, something like that. I'll do one more quickly. Wheaton. Similar pattern to Fortuna. It's getting ready to rock and roll. So yeah, could be a season of gold miners coming up. Where's the target? up here, 120. Okay, I'm out. Peace.